It's Wednesday, October 22nd. Let's level up. We're into the earnings season now. We had seen some poor price action after the Netflix earnings. I had told you it's usually the first few go the same way and then the next ones go the opposite way. And that's why I thought Tesla was going to be in for a move down, and that's what happened. I discussed this in the midweek video. Tesla was down, IBM seemingly was down, Lam Research was up, down, and seemingly flat, so we'll have to see how that resolves. Overall, though, we're not seeing huge moves up on stocks on good earnings, and the moves down have been much worse on stocks that miss. Even stocks that have decent earnings seem to be able to not hold gains so far. Look, we're still really early in the earnings process here. I don't want to generalize anything just yet. As far as the VIX goes, it's been a tale of ranges. We were capped between 1724 and 1756. Once that cleared, we saw 22 to 2251. And once that cleared, we saw 2832 up to 2957. After 2957 failed, we knifed through the 22 to 2251 and found support at 1724 to 1757. So what now? Bulls will need to get below that 1724 to 1757 for still higher prices. Anything above there, I think, is still chopping with risk back up to the 22s. If we can crack there, we'll see 1623 and maybe even a trip back down to the 14s, which has been rock solid support. And coming into earnings season and with the Fed, I'd be very surprised to see the VIX give up the goat just yet. As far as big earnings go for the rest of the week, there's Intel, Newmont Mining. There's a few interesting names, but nothing that's going to be market moving in my opinion, so we'll have to wait till next week for that. Did get a little bit of a dose of reality today with the European Union and with another shakedown of Apple, which took price down, and there was also some reports that the iPhone Air isn't selling so well, surprise, surprise, but the other iPhone 17 models are doing better, so Apple is winding down production of the iPhone Air and increasing production of the other iPhone 17 models, particularly the Pros and Pro Maxes, which are the more high margin ones that are selling better. As far as the ES and the NQ go, we are playing also a game of ranges. We weren't able to hold 67.54 to 67.66.75, so we came down to 67.08 quarter to 67.18 half, and we undercut it a little bit. Remember, if we can't hold 6,800, we'll come down and retest 6,700, and we undercut it a little bit, but that is what happened. So now the key is the bulls can get over 67.54 to 67.66.75. I think the move is still higher. Anything below that, I think we're chopping between ranges, and we'll need to see which one of the fibs cracks. 67.54 to the upside or 67.08 quarter on the downside. I think it's a go with on a break either way at this point. There may be a little bit of resistance up there at the first touch on that 78.6 because we had support there. So my guess is there will be some initial sellers, but if the back off is shallow and then we clear it, I think it's back to the upside. Qs, similar situation. We weren't able to hold over 25,129.5. We came down in 24,922. Anything over 25,026 is okay. I'd feel better back over 25,129.5. That's the 78.6 of the range, and when you're above 61.8s and 78.6s, 100% retracements become more likely, particularly over the 78.6, obviously. As far as SPY goes, we pulled back, we filled in the 1017 gap to 664.39 and bounced. We also touched the top side of the old down channel, which was also that triangle pennant we had discussed, and bounced back up. Anything over 667.34 I think is better than not. Over 670.23 is still better. I still think we're very close to the highs and we may get a touch. On guard for look above and fails. Both look above and fails and look below and fails have been hallmarks of this market, particularly in crypto, which we'll get to shortly. I think the bulls are sort of okay on pullbacks, really, as long as the 50 MA holds at 650, 656 and rising. But shorter term, I think you could use today's low of day at 663.30 as a must hold. If a short triggers below there, I think you could use the 20 MA as the stop at 666.02. As far as the Qs go, we had a bit of a dubstep setup the past couple days. We lost the 609.32, which was the higher low. We got the liquidation break. We undercut both the 20 and 10 MA. We're able to recover, but I think the bulls here may just tread water for a bit. I think we're going to have to see some more of the big cap earnings if we're going to break out sustainably. On guard for look above and fails, of course, but the more pressure we build here under the highs, and if the liquidation breaks become shallower and shallower, eventually we'll go, because the more times you bang on the highs, the more likely it is to clear. If we do again trigger below today's low of day at 599.74, so there were sub 600 buyers, which is interesting. I think we could target the 50 MA at 589.40 and rising, which does line up with the up channel low and primary trend here. If we were to trigger that, I think you could use the 20 MA at 602.96 as a stop. If you're a purist, you could always use the close at 605.49. Either is fine in my view. The aforementioned Apple did get a liquidation break. We do technically have a look above and fail. Anything below 260.10, I had told you don't let it get below 260 to 260.10 on you. The good news for the bulls, the 20 MA held at 254.52, and I'm always most comfortable owning Apple when it's above both 10 and 20 MAs. So it's still okay, but we do need to get over 260 to erase the look above and fail scenario, and we could move still higher. If you're short, that has to be the stop in my humblest of opinions. Netflix down with downgrades. It stopped right on the 200 MA, which is interesting here. I would be more comfortable buying the dip. I've told you my big target, the end down channel low, is at the check back to the old breakout at 1064.5. So it's very possible we get there. Anything that can get back up over 1134, I think could constitute a look below and fail, and we could make a move back up to the jump after hours low at 1147.64, and then we'd see. But today was really a gap and go down. We might get a bounce tomorrow, but usually these patterns resolve a little bit lower. We aren't guaranteed to get down there, but that would be my downside target. It was actually my target on the last earnings blow up, but we didn't really make it all the way down there. We treaded water for a bit. We now, however, do have a down channel, and that would be the target for the channel low where you want to cover shorts and maybe look for a reversal, or better still, to sell some out of the money puts. I would probably do something around 1020 to 1000 area, which was the last breakout zone before the 1064. Tesla was just a victim of the setup. It was still up ahead of earnings. We were over the 78.6 at 429.84. We're trading at the 422s as of this video. There's a 912 gap fill at 395.94 and the 50 MA at 393.84. I'd be more interested in this really a lot lower, probably closer to the 367s, but we'll see how it trades tomorrow. I think you could use the opening 5 and 15-minute lows as the keys. There might be a bit of a short covering rally. My guess is that shorts might try to lay into it here. I still like the story. I still think the robo-taxi is the future, but they had a lot of pull forward of demand. I am noticing Tesla offering very aggressive APRs for new business. We'll have to see how that plays out, and they are putting some new models into the lineup, which I think are actually doing fairly well. Being a new Tesla owner myself, I think the car is phenomenal, but they do have a lot of competition from BYD overseas. Fortunately, that won't be competition for them in the United States, at least not anytime soon. Google had gotten hit on the OpenAI browser, which is really for Mac only at the moment, and it doesn't even work on my Intel Mac. It only works on the Mac Silicon, so that does eliminate some users. I do think this will get more widely rolled out at some point, though, and then they were up on the Anthropic cloud deal. I think as long as Google can hold the 20 MA at 246.92, it's fine. There was some selling at 255.37, which is the 2 times range, which makes some sense to me. If we are going to target for end of year rally, we could be looking at 290s. But I think that if there is a larger pullback, we could target 229.75, which was the 9-2 after hour spike high on their antitrust favorable ruling. Gold continued down today. It did recover quite well into the close after we held the 20 MA. 10 MA now might be resistance at 382.39. We'll have to see. I think the bulls might try to give it a run if they can stay up over 378.47, because that was high of day today, and then we'd see. There was a big gap down. I think that the real risk for gold happens if we rally to a lower high and then take out the last swing low, which could be today's low at 368.93. I don't mind doing some put ratios if you want to play for the 50 MA at 342s, or if you want to go longer dated for 325s at the 100 MA. There's not a lot of juice here because IV isn't that high. It would be better if the VIX was in the 28s, 29s, and then I think you could get some premium for those out of the money puts. The Bitcoin. We have now successfully held the 107,970. The bulls need to get it over 110,150 here. We could have a bit of a higher low. It's very odd to me that we see these pullbacks in the overnight session and then rallies in the RTH only to get pulled back again, but we're actually rallying for a change in the overnight session. It seems to me that the bulls found support at the 200 MA, which is currently 103,835 and rising, and resistance at the 100 MA at 113,501 and flattening. So very simple. Bulls need to clear the 100 MA, bears need to get it below the 200 MA. People were asking me what happens if they crack the 200 MA. You're looking at 99,918 to 100,815. After that, it's 93,951 to 95,705. And that zone lines up with the channel low and primary trend, and it's probably a buy the dip. Generally speaking, markets are still up near highs. If you have big gains in some of these big cap tech names, might be a good idea to book some of them ahead of the earnings, considering we've seen a lot of moves down on earnings. Now, I do think that there tends to be this pattern where the first couple to few of the big cap, mega cap names report, they go one way, and then the next set go the opposite way. So the front-loaded ones now seem to be going down, so the back-loaded ones will likely go higher. Like and follow for more.